Our second topic is about the journal. We journalize transactions in the journal. It is a record of all transactions. Think of a journal like a diary. A diary records everything that happens in order, and that is what a journal is. Everything will be recorded in chronological order. This is what a journal looks like. For this example, we paid cash to buy supplies. The first column is the date. In this case, it's 1/1 for January 1st. Next, we have the accounts we will be using. I'll go over this in a moment. Then we have the dollar amount. A few things to notice here is that the debits need to go first. Credits go at the bottom and are indented. See how cash is moved over a little bit? That's the basic setup of journalizing. Another thing to notice is that the amount for the debit and credit columns are the same. When a transaction occurs, first you need to analyze the transaction. If you wish to do a T account, that would be next. Remember, T accounts are non-official step in the accounting process, but would be useful before we do a journal entry. In this example, both accounts, supplies and cash, are assets. Remember, assets increase on the debit side. Our supplies are increasing and our cash is decreasing. That is why supplies has the debit entry and cash has the credit entry. As a reminder, we always have at least two accounts that are being affected. You can have more accounts, and I'll show you an example of that next, but you still have to follow the rules. For instance, if there are 3 accounts being used, debits still go on the top, credits are indented at the bottom, and debits still need to equal the credit column. We're going to work on classwork problem number 2, part A. We will be journalizing 9 basic transactions. I cannot stress enough how important this topic is. Please repeat and practice this as many times as possible. I also recommend pausing this video before each transaction so that you can try it on your own first. For this problem, we have Carla Tanner, who opens a web consulting business called Linkworks. Our goal is to journalize these 9 transactions. For the first few of these, I will also be using T accounts to illustrate how they are used. After we get some practice with journalizing, I will go straight to the journal entry and skip the T account. It is up to you if you decide if and when you want to use T accounts. In order to make this easier for us, I have the presentation split up between the different transactions that are occurring. The first one on January 1st, Tanner invested $80,000 cash in the company. And I have the 2 T accounts at the bottom because this will be affecting 2 accounts. I think the hardest part is to figure out which 2 accounts are being affected here. We have the owner who is investing their personal cash in the business. What is happening to the business? It is now receiving cash. Why is the business receiving cash? Because the owner is putting the money in. What's it from? We always need at least 2 accounts because we're not getting money for free. The first account we have is cash that's being affected, and the second account would be Tanner, capital. Tanner Capital. That's their capital account. Remember, capital accounts are what the owner puts into the business. What type of an account is cash? Remember, cash is an asset account. Asset accounts increase on the debit side and decrease on the credit side. Tanner Capital, do you remember what's the positive and negative side for a capital account? It would be the opposite. It has a credit balance. It will increase on the credit side and decrease on the debit side. But remember, we're not going to do decreases for capital accounts. If an owner takes money out, we'll use the withdrawals account instead. Now let's figure out which account will get the debit and which one will get the credit. What is happening to the cash in the business? Is the business getting cash or spending cash? Now, I have many students who really aren't quite sure for this, but the owner is giving money to the business. We are the accountants for the business, not for the owner's personal finances. Yes, the owner's cash is decreasing, but we're not worried about that The business, though, just got a huge chunk of change. So the business cash is actually increasing by $80,000. We will debit cash $80,000 because it's positive on that side. Now, a trick to journalizing is that if you can get one of the accounts, you can get the other account because it would be the opposite. It's a little shortcut, but I do recommend analyzing everything first. So if we did the shortcut way, if we know that this is a debit, then we would have to do a credit here because debits have to equal credits. We can't just have a debit and a debit. That won't work. But let's take a look anyways. Capital is positive on the credit side. The owner's capital account is increasing. And remember, we don't do debits here anyways. Whenever the owner puts money into the business, this account will increase. If they ever took money out, we would use the withdrawals account. So we should only be using this side. We have a debit of 80,000 and a credit of 80,000. These are the T accounts. We now want to take these entries and put it into the journal. Which one needs to go first? Remember what I said that the debits go up top? The debit would be this 80,000 to cash. We would write cash on the top line and $80,000 in the debit column. Next would be the credit of 80,000. We will indent it. We'll put Tanner Capital and then $80,000 in the credit column. And that's how we journalize. That's for April 1st. Let's take a look at some of the other dates. On the 3rd, the company made a credit purchase. This is a key word here, credit purchase. Means it wasn't in cash, it was on account. The purchase was for $8,000 in office equipment and $3,600 in office supplies. This is called a compound entry because we're going to be using 3 accounts instead of 2. Now, just to kind of give you an idea, we will mostly be working with only simple entries where there's only 2 accounts, but every now and then I might throw in 3. Later on, though, we will have, many different accounts that we'll be using, sometimes 4 or 5, 6 or more lines for one entry. For April 3rd, we have 3 different accounts that are being affected here. Like I said, the hardest part is really thinking about what 3 accounts are being affected. Well, we have office equipment here. We're getting that's being affected. We're getting office supplies as well. That's being affected. So we got equipment and we got supplies, but did we pay in cash? No, remember it's on credit. So we owe the money later. What's the name of the account when we owe later? It's accounts payable. Remember, we're never getting anything for free. If we got equipment and supplies, we either pay cash now or we'll pay cash later. In this case, we will pay cash later, and we will see that transaction as well. Now, what type of an account is office equipment? That would be an asset. So it follows the rules where debits are the positive side. What about office supplies? What type of an account is that? That is also an asset account. So it follows the same rules as office equipment. And lastly, accounts payable. What type of an account is that? That would be a liability account, which works the opposite of the assets. It has a credit balance. Now that we have this laid out, we can try to figure out which accounts gets the debit and which ones will get the credit. Now, for the office equipment, are we getting the equipment or are we getting rid of it? Is it going up, positive, or is it going down? Well, if we're buying this for our business, we had no equipment to start with, and now we have $8,000 worth of office equipment. This is actually a positive. We have this equipment now. Our office equipment account will go up by $8,000. If we ever sell it or dispose of it, or it just gets used too much, then we will credit it to take it off our books. Office supplies. Are we getting office supplies or are we getting rid of office supplies? We are getting it. Therefore, it would also be positive. We're going to use the positive side, the debit side, because this account is increasing. Lastly, we have accounts payable. We now owe this money. Accounts payable will show how much debt I'm in. Did my debt increase or decrease just now? It increased. It's kind of like using your credit card. We just swiped our card and bought all these things, and now we owe the money. So the balance in that account just increased. Later on, when we pay this off, it will decrease. For right now, it will increase as a credit. We still need to do our debits first, our credits last, and debits still need to equal credits. Which account should we journalize first? It would be the two debits, office equipment and office supplies. These are both my debits. Office equipment, debit of 8. Then we have office supplies, a debit of 3,600. Then we will do the credit. Remember, we indent this, accounts payable, 11,600. My debit column has to equal my credit column. 11,600 equals 11,600. Good job, it equals. On the 6th, the company completed services for a client and received $4,000 cash. This seems pretty easy. We got cash, but why did we get cash? What's it from? It's from our sales, it's from the services, it's from what a business actually does. You know, a business is there to make sales, and that's what happened here. So think for a second of what two accounts are being affected. We have cash and service revenue. Cash is an asset, so it has a debit positive side. Service revenue is a revenue account. Which side is positive for a revenue account? It would be the credit side. In this example, is my cash going up or down? My cash is going up. We did a sale and someone's paying us. Our business is getting money. Therefore, cash would be a debit. Now, service revenue, is that going up or down? Well, we made a sale, and this account keeps track of all the sales we made. This account has also increased by $4,000. Remember, we're really not doing any debits for service revenue, not for a few chapters from now. So I do not want to see any revenue accounts as a debit in these first few chapters. Which one do we journalize first? It would be cash, because that's the debit. We do our debits first. Cash of 4,000. Service revenue will go second. We will indent it, and it gets a $4,000 credit. For these next ones, I'm not going to be using the T accounts. I'm just going to go straight to the journal entry, but feel free to use T accounts if you want to. Now, the company completed a $6,000 project for a client who must pay within 30 days. Well, we did something for a client. We did work for them. So that would be a sale. Except in this case, we're not receiving the cash. They're going to pay us later. I'm going to go backwards for a moment. It's very similar to the one we just did. We did do a sale, but instead of receiving cash, they're going to pay us later. Do you remember the name of the account when someone's going to pay us later? That would be accounts receivable. So in this case, we just replace cash with accounts receivable. It was 6,000, and we have service revenue of 6,000. Remember, revenues, I just showed you and I went backwards, has a credit balance. Accounts receivable is an asset. It has a debit balance, and this account went up. Someone owes us money, we're keeping track. We're going to add that to this account. If they pay us back, we will then subtract from there, and I'll show you how to do that coming up soon. Okay, on the 13th, the company paid $11,600 cash to settle the account payable created on April 3rd. So let's go back for a moment to the April 3rd entry and see what we did there. This was the April 3rd entry. Remember, we bought office equipment, office supplies, and now we owed money. Now we're at the stage where we're going to pay some of this money that we owed, this account payable. This account payable increased, it went up because we owed the money. Now we're going to debit it. It's going to go down based on how much we're paying. On April 3rd, we credited accounts payable. We are now going to debit that account to show that we are paying it off. We actually paid off the full amount. And how did we get rid of this? What do you do when you pay off a debt? What other account is being affected? Cash, right? You can't pay your credit card bill unless you have the cash for it. We have cash being affected. In this case, cash will get a credit because it's decreasing. We are spending money. Cash gets a debit when we're receiving money, and it gets a credit when we're spending money. So this transaction shows me cash went down by $11,600 to pay off my liability accounts payable by the same amount. Now, we don't owe them anything. The next transaction happened on the 25th. The company received a payment of $6,000 from the April 9th sale. The April 9th sale is right here at the top of the screen. On the 9th, we made a sale, and they're going to pay us later, and now it's later, and we're going to get paid. We are receiving cash, and why are we receiving cash? It's because someone owed us money. We are getting cash, and if we get cash, is that a debit or a credit? That would be a debit. Remember, cash increases as a debit. You'll get tired of hearing me say this. And then the other entry, the credit entry, would have to be the accounts receivable. Accounts receivable is going down. Here it went up by $6,000 because we were owed that, and now it's canceling out. It's going down by $6,000 because they're paying it off. So now no one owes us any money at all. One mistake that I commonly see is that students put service revenue down here because it's coming from a sale, but we already put the sale down. We already showed that we made a $6,000 sale. If we put service revenue down here again, we would be double dipping. We will be counting the same sale twice. So just be careful about that. Okay, we have a few more left to do. On the 28th, Tanner, who was the owner, withdrew $5,500 cash from the company for personal use. What two accounts do you think are being affected here? Well, cash for one, and the owner's withdrawals account, right? Because the owner is withdrawing money out of the business. Now, is cash going up or down for the business? It is decreasing. Cash decreases as a credit. Also, owner's withdrawal account can only be what? Right? Remember, it can only be a debit account. So we have Tanner withdrawals of $5,500 as a debit. Cash gets the credit of $5,500. Right? Withdrawals has to be a debit. Cash is decreasing, so we show that as a credit. Okay, on the 29th, the company purchased $600 of office supplies on credit. So we are getting office supplies, and since it's on credit, it means that we will owe this money for the future. Office supplies is what type of an account? An asset. And are we getting supplies here or getting rid of them? Well, we're getting supplies here. So my asset is going to increase as a debit. Okay, we have office supplies. This account is going up by $600. Now, normally it would be cash if you paid in cash, but we didn't. So in this case, it would be accounts payable of $600. Our last entry, the company paid $500 cash for this month's utility bill. Now, is cash going up or down in this case? It's going down, right? Because when you pay a bill, your bank account gets lower. You lose cash because you're spending it. When we spend cash, it's a credit. The other account will be the debit, which in this case would be the utility bill. That's what the cash is going towards. Now, we don't just write utility bill down here. What is it? It's an expense. It's a monthly expense that we have. So we'll call this utilities expense. And remember, all expenses have debit balances. We have utilities expense, $500 debit, and then we have cash, a $500 credit. These are just a few of the common journal entries you're going to be seeing throughout this chapter. As we progress through the course, we'll be expanding on this and doing more and more types of journal entries with different scenarios. Like I said earlier, this is super important, so please go back and rewatch this or watch the other videos that I have posted below this one.